would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. It's Friday, and today, that means another interview. We have a great guest, very topical because we've talked about this area before. So I'm not going to waste any more time. I'm going to jump right in and get this going. Welcome, everyone, to another interview edition of Real Estate Realities with the Rebel Broker. We have got a great show for you today, particularly if you are someone who's been in the audience for a while. You know that Detroit has shown up on an awful lot of lists for us. And today, we are graced with Al Beahn, real estate investor in the city of Detroit, who is doing amazing things. Getting him some great achievements in terms of how he's building his investment portfolio and moving forward. Welcome to the show, Al.
Thank you, Robert. Appreciate you having me.
You bet. You bet. I'm excited about this because we've literally talked about Detroit just within the last week. And we can actually maybe touch on a few of the articles that you've mentioned and you discussed with me before we started the interview. But before we do that, let's get a little background on Al. What's your background in real estate? When did you get started? Kind of give us a history.
Okay. Yeah, cool. And again, thank you for having me, Robert. I'm excited to be a part of the show. So yeah, I am a 2009 Central Michigan alumni, and I got into real estate as soon as I graduated. I graduated what would that be, the first semester of 2009. Mm-hmm. I graduated. I moved home, and I was actually living in my parents' basement. My dad said, "Listen, dude, you gotta do something." So I decided that I wanted to be in real estate. I'd always wanted to. I just never knew how to or what to do. But I was kind of in a position where I had to make a decision. So
just to hold you off right there, real estate was a thing that you wanted to do, but you had no family members or family history in real estate. So you really were starting from zero in terms of experience. Is that correct?
Yeah, absolutely. I always had the entrepreneurial spirit. I ran a t-shirt company in college. That's actually what I did for work at school. My father was a real estate agent. He had no experience in the investing side of things. So mm-hmm. Yeah, I was absolutely green. I had no idea what I was doing. Good.
That's where most people start.
Right. So I bought my first property. It was December of 2009 in a city called Roseville, which is a suburb of Detroit. And it was just your normal fix and flip. I did all the work myself. I had a few buddies help me with that. It took us, it was close to 90 days to do the renovation, but we did it all ourselves, which I thought would help save money. But in the end, it really didn't. But we sold it. I think it was on the market for just about 3 weeks. We sold it, and I made a pretty nice profit. I think at the time I was 22. I made, I think, around $16,000. And I said, man, this is pretty awesome. And for me, that was my entry into the business. And I said, this is what I want to do. So from there, I actually linked up with a partner at the time. We started doing really just these retail flips, right? We're doing the fix and flips. And along the way, we saw the opportunity in Detroit. That turnkey model was kind of born. Mm-hmm. And we kind of went with it. We picked up a couple clients that were looking to buy properties, and we were, doing the turnkey thing, buying properties, renovating them, placing tenants, and then selling to the end investor. And along the way, we built a management company. That was we started that in 2010. So we had a really great run together. We split up about, I think it's been 4 years now, and I've been on my own since 2013. So yeah, I've been in Detroit the entire time. That's been, 90% of our investment income has been in Detroit mm-hmm. since, really 2010.
Okay. Now, one thing that you mentioned early on was you did the work yourself, but you to save yourself money, right. But you didn't really. I think that's an interesting one because I've done that too. Why don't you share with us maybe a couple of details, maybe some pitfalls folks can avoid from that lesson you learned?
Right. Yeah. And I think this is one of the biggest mistakes the newbies make is they think that they're going to save money. And in this business, I think time is much more valuable than money. I mean, if you have debt on your investment properties, you're paying interest, you're paying insurance, you have carrying costs. So this is a project that probably could have been completed in 30 days or less. But because I did it myself, I was inexperienced. It ended up taking us almost 3 months. So, you know, there were a lot of things at the property that I thought I saved money. I probably didn't,
Yeah.
buying bare cabinets from Home Depot and staining them myself, and they just didn't turn out great. So I had to go back and buy new cabinets, just silly stuff like that.
Yeah.
No, I wasn't installing the furnace myself. We did plumbing. I didn't do that. I did more of like the cosmetic painting, tile work. We did some finished carpentry, stuff like that. But yeah, I mean, getting into it, you think you can do everything, and next thing you know, your budget's getting out of control, and you don't know why. So I got very fortunate. There was a very big investor in the market who I was, fortunate enough to have a conversation with. He gave me some advice, and I took his advice. And from that was actually the only property that I ever did the work on myself. From that point forward, it was all contractors and GCs. And I think that's why we kind of catapulted, because we kind of learned early on what not to do.
Yeah.
And I feel like that's why moving forward, we were much more successful.
Okay. Yeah, I think so many, I've made that mistake, and I'm actually in the process of putting my property on the market. I'm kind of in a let's liquidate when we're at a high. And in my opinion, we're kind of at a high, and things are likely to dip in my market a little bit. And
Agreed.
That's the same line I've been walking, where I've done some things myself and I've had other people do things. And I just finished doing some tile work. And I go back and I look at it and I'm like, you know what? That's not exactly right. So
It doesn't look the way it should, huh?
yeah. So I keep wondering if I should go back and do it over, or hire someone to do it right, or what.
Right.
All right. So Detroit, it's a sexy topic because you get people who have absolutely emphatic opinions in both directions.
Love it or hate it. I mean, there's not really any in between.
No. And it's, so many people that are looking for investment opportunities. One of the things that's kind of true is that even if what you hear in the headlines is a overblown version of what's happening, or just isn't representative of Detroit as a whole,
Right.
that introduces a level of chaos. And there's profit in chaos, because for the folks who can see
Right.
beyond chaos and think rationally, there's 9 times out of 10 huge opportunities. So
Right.
tell me a little bit about that. I mean, we can talk about maybe some of these specific articles and other things that other people are saying, but I'd much rather get the ground truth from you, a guy who's actually there doing it every day. Talk a little bit about that market.
Yeah, absolutely. And look, I do think there are certain parts of Detroit that maybe do fall into that negative stigma of Detroit. I mean, I think, that's not just Detroit, though. I think all the major metro area markets in the country have that. I don't think Detroit's the only market that has it. But what I think people forget to see, and most people don't even realize this, but Detroit is 140 square miles. It's a huge city. So, every single time that we have clients come to town, we show them the good and the bad. We don't just show them the good. We show them, this is what you see, and this is what we deal with every day, and this is the good investments. So yeah, I think the media really blows it out of proportion. They took the bankruptcy thing, made it a bad thing. In reality, it was probably the best thing that's ever happened to the city of Detroit in the last 50 years. But yeah, I think when people come and they see what's going on, they have a totally different opinion, and I think that's why we've had success, because not only there's all kinds of stats out there about Detroit. I mean, it's the number one median income growth in the last, I think, since 2010. I think it's an average about 20%.
Mm-hmm.
So there's that. Obviously, the price points are at such low levels that the ROI is really high. And I think you and I discussed also that Detroit is one of the top 10, if not the number one grossing income city in the country. And I think Dennis Stern over at the Investability podcast, he came out with that article that we saw. So yeah, I think, there's a lot of good things going on. There's so many indicators. I mean, in 2016, the Michigan market brought in 100,000 new jobs, which A lot of those were in Detroit. We've had
What's
a ton
kind of
companies.
backfilling that, Al, in terms of, I know a lot of, when people think Detroit, they think car manufacturers, and now they don't anymore because
Yeah,
that's sort of,
so much more. Yeah, I mean, there's a ton of tech that's been downtown. Financial services have moved down there. Yeah, I mean, I think there are a lot of auto industry jobs as well, but I think there are a lot of others. I mean, I think the number one job here in Detroit, or the number one employment opportunity in Detroit, is actually healthcare. So doctors, nurses, people that work at hospitals. That's actually the leading job here in Detroit. So,
okay.
And I think if the auto industry takes a hit, I don't think healthcare is going anywhere. That's going to be here forever. So while I think it may have an impact, I don't think it will have the impact that everybody thinks.
Okay.
If we have 10 tenants, maybe one or two of them are factory workers. Maybe that's even a high number. I'd say it's less, I'd definitely say it's less than 20%. So yeah, that's what I think about that when people think about the auto industry and how important it is. It's important, but I don't think it's as important as everybody thinks.
Okay. And in terms of maybe reaching out to those folks who are interested in investing in areas outside of where they live, or maybe Detroit is close enough for someone who maybe doesn't live in Detroit, but maybe is a couple hour drive away or something like that, but they don't have the ground knowledge you do. What would be your advice to someone who wants to maybe take that first step of at least doing a little bit more hands-on research? The folks that can do the Trulia stuff from their desktop and the Zillow stuff and the Redfin and Realtor.com and all those wonderful things. When someone wants to take that next step and get some real ground truth, what would you suggest for them in terms of looking at Detroit?
Yeah, so and I could say this about any market. If you're interested in a market, or Detroit, or any other market in the country, I always advise go check it out. Come to Detroit, look at it, see it with your own eyes, and just get a feel for it. Now, we have a ton of people that don't come here. They feel comfortable with what they've seen on the internet, and working with us and hearing about our experience, and kind of seeing what we have to offer. But yeah, I mean, if you're just getting into it, I think it's a good idea to come check it out, see it for yourself, kind of get a feel for the area, see if it's something that you can stomach, and while you're here, build a team. I think we always preach that in all of our like we do webinars and stuff like that. You gotta have a good team. Yeah. So are you going to work with an agent, or are you going to work with a turnkey provider? I don't think either way is wrong, but I say do your due diligence with whoever you're working with, because there's a lot of companies here that are good, and there's a handful that are not so good. So I would just say do your homework.
Well, and sort of on that is also it's important to pick partners. If you're going to go with something like an investment company, for instance, that's part of that decision-making process. I'd like to talk with you about that next, but before we do, let's take a quick break, and we'll be right back after this.
Okay, sounds good.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner, broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
All right, everyone, welcome back. We are speaking with Al Beahn, a real estate investor in Detroit, getting some really great ground truth. And one thing we talk about on this show all the time is that, one of those steps that needs to be a part of any process for you evaluating your investment strategies in an area maybe you're not familiar with is to get the ground truth if you don't already have it. And part of that is putting together a team, as we just discussed. And another element of that is also potentially picking an investment company. Al, what can you offer on that front?
Yeah, so Pioneer Homes is our company. We've been doing this since 2010, and We cover everything, not only from the acquisition standpoint, but we also assist in the property management. We have a handful of management companies that we use here that we've been working with for a long time, which, by the way, is the most important part of this entire process. It's your manager. So we're going to assist you through the whole process, from the acquisition to the management side. If you have any problems, we're not here just on the sale. We're here on the customer service side as well. And, we're here to educate too. We're not here just to make money. We want people to be successful. We want them to learn how to do this because, it's not like every guy that we work with is just some millionaire who's got a bunch of money laying around. He can go buy 50 houses. Believe it or not, these are people that have $50,000, $100,000 saved up. It's, potentially their life savings. So we need to make sure that they're successful because it's, we have to sleep at night. Right. So, and really too, when our clients are successful, it brings more business our way. So I think it's very important that we assist not only on the front end, but on the back end as well with the management and cash flow side of things.
And what does that relationship feel like to the person who's using your services? Is this something where they'd best be served by calling you before they ever even come out to get the ground truth, maybe while they're still sitting at their desk figuring things out? Does it feel like a conventional relationship with a real estate agent, or is it a little bit more involved?
I think each individual client has their own opinion, but I say that we have a lot of hand-holding relationships where our investment directors may talk to somebody for a month or 2 months before they even do anything. And this isn't like one call a month or one call every other week. It's, there's clients that some of our sales guys will talk to, several times a week, answer. And I was talking to one of our guys yesterday. He counted the questions he was asked on a phone call, and he said he lost track after 50. So, so yeah, we have the greenest of the green, but we also have people that own, 20 or 30 or 40 houses before they get to us. So I think the green people, I call them the green people, the green investors or the newbies, I feel like they would feel like it's a very close and personal relationship because it's required. Right. I think the seasoned investors, they don't need all the BS. They just say, hey, I want to buy property. They know what they do, or they've probably done their homework. They know what they want. And those are pretty straightforward. So I think it's kind of all over the board.
Okay. So at this point, if someone had run through, we try to offer up value, right, in every show. And a lot of that is techniques and strategies to help focus in on different areas that are potential investment opportunities. If someone were to decide, you know what, I've sort of done the 30,000-foot view of Detroit, and maybe I've looked at the heat map for crime in Detroit, or I've read these articles about where folks are really wanting to live in Detroit, and so I've focused on certain neighborhoods. At that point, if someone were to reach out to you, you could give them some feedback on whether or not all of those conclusions really tend to match with the ground truth that you are familiar with. But you could also then set up searches for them that fit their criteria and continue to guide them through the process.
Yeah. So when they come with us, they decide, hey, we want to work with you, or hey, we're thinking about working with you. We just give them access to our off-market inventory. I'd say 95% of our inventory is off-market. We don't keep the site completely updated only because things, when they come out, they go sell very quickly. So yeah, we've been here for a long time, and we just kind of let them know, hey, if we agree with their information, we'll tell them, yes, that's what we think is accurate. And if we disagree, we'll let them know. But at the end of the day, look, we're the guys that have been here for almost 10 years. And we just say, look, you need to kind of go with our judgment here because we know what we're doing. I kind of compare it to a kid going to Harvard and telling his teacher that he's doing something wrong. I don't think that's very accurate, So we are the experts. We've been doing this a long time. If we think you're onto something with your information, we'll kind of reinforce that. And if we think it's inaccurate, we'll also let you know that as well.
Okay. Now, just to sort of kick the ball off, right? Just to maybe get some potential investors poking around. What would you throw out as a part of Detroit to start in if someone they don't want to reach out and really establish a relationship yet with a real estate agent. They want to do their own thing on Redfin and Zillow and or Google or whatever tool they want to use to search.
Right.
What would be a community? What would be a part of Detroit that you would say, hey, you know what, take a look at this. We think this is a smart area to be looking at.
Yeah, so we kind of hone in on about 6 zip codes in Detroit. And also, by the way, we call Detroit. There's 2 parts of Detroit: the east side and the west side. The east side is less desirable. It's also a little bit smaller than the west side, but there's only a few small pockets on the east side that we like to invest in. One of which is East English Village, and there's another up and coming part of the east side. It's Morningside. It's still kind of iffy. Morningside is, but if you walk through there 5 years ago and walk through today, you can tell it's taken a huge leap forward. If you're looking on the west side, there's a lot of different areas. Rosedale Park is one. It's tricky to get deals there because it's a smaller community.
Yeah,
and the values have significantly grown since we got into that market. But there's Grandmount Rosedale, which is nearby. North Rosedale Park, Aviation, Bagley is a very popular area. But I would say focus more on the west side. I think that's where the values have risen much higher, and I think that's where we have more success. I think the east side is a little bit riskier. Depending on where you're at, there still are okay investments on the east side, but a lot of our inventory is going to be on the west side of Detroit.
Do you see the suburban areas being attractive, or do you tend to stick more with the areas in downtown on the west side?
Yeah, I mean, we actually were pretty heavy in the suburbs back in 2012, 2013 when the values were still pretty low. But I feel like the value isn't there like it used to be. I think in Detroit, there's a lot more inventory to choose from. There's a lot more opportunity. I'm not saying there's not opportunity in the suburbs. I just think if we're selling 20 homes a month, we probably couldn't do that in the suburbs. I don't think there's enough value there. And I also don't think that the price points make sense. I think there's a couple markets, a couple cities in the Metro Detroit area that make sense. But it's also, again, your risk tolerance. If you want to be a much lower risk, well, then, go buy a $100,000 property that rents for $900 or $1,000. Mm-hmm. And that's kind of what that market looks like. So it just depends on a lot of variables. So in Detroit, it's I don't want to say super high risk, but it's a higher risk than, let's say, the suburbs of the Metro Detroit area. Yeah. But again, you're looking at potentially 15 to 16% returns compared to maybe 10 or 11.
Yeah, and what's amazing, Detroit really, I think, gets a bad rap. I mean, when we were looking at reports that were talking about the best and the worst in terms of return on investment, people always are singing about San Francisco, San Diego, Los Angeles, all these areas that are supposed to be amazing. But when you look at the return on investment numbers, if you're looking back, particularly I love the reports that say if you bought a property 1 year ago as an investment, what would your ROI be right now? And all those banner areas are at the very bottom of that list. I mean, the worst in terms of return on investment. And the amount of capital involved, you were just talking about purchasing that $100,000 home and getting that $1,000 a month in rent. Well, that sounds like an awesome deal to me in terms of what you're making back compared to spending $1.3 million on a house that you're not even going to be positive cash flow on right out of the gate. And when you do go positive cash flow, you're making 1%, 2% tops.
Yeah, exactly. Yeah, I mean, that's why. And it's funny because we do have a lot of seasoned investors that we work with, and they were in the higher cap or the higher end markets, like the 150 to 200K. And the cap rates just aren't there. They got into them at 9 or 10, and now the best they can get is like 6 or 7 max, So they tend to get out of the market and start looking for some higher ROI opportunities. And I think that's what Detroit is right now.
Well, and what's funny is it can be painful, right? If you're a real estate person who really takes the fiduciary part of the thing as a primary thing that you really need to watch out for your client's interests and be an honest advisor. Whenever I have one of my clients who's spending $1.2 million on something, I get that this makes me lose money because I make a nice little commission off of a $1.2 million sale.
Right.
But I say, would you rather have a one property that costs you $1.2 million that's going to make you less than 5% return on your money? Or would you rather buy 12 homes in a place like Detroit that's going to make you 15%? And if you have a tenant move out, you're losing 1/12 of your income for the period of time.
Right.
So, what? The math for me is easy. So looking at these areas should be an easy thing.
Yeah, no, I mean, anytime you can diversify, I think that's always the wisest way to go.
Yeah. Well,
Absolutely.
and I love the ground truth you bring to it, because you talked about areas that say, you casually mentioned, well, there's this one area that's maybe on a borderline in terms of consideration or risk analysis. But over the last 7 years, I've seen this happen, right? That's the thing. You're going to spot these areas that are up and coming through someone like you that's got the ground knowledge to know, there's gentrification happening over here.
Right.
And that's, if you can ride that train, that's a great way to sort of be a force multiplier for your investments.
Yeah, I agree. And there's a lot of areas in Detroit that are like that. I mean, and I'll just kind of touch on Rosedale Park because that's, it's one of my favorite parts of the city. It's really hard to get property there, but when we do, we love getting them. But
why is it hard? Is it just there's not a lot of inventory, or there's tons of competition when stuff comes up?
It's not a very big area. It's maybe a couple square miles, and it's a lot of home ownership. So, as an investor, you want to try to go in and get a deal, right? So we're not just competing with other investors. We're competing with people that want to live in the homes, who are getting mortgages, who tend to pay a much higher price than we do. And and then also too, Rosedale Park. I mean, if I know you said $100,000 for $1,000 rent is good. In Detroit, it's really not. I mean, the property I always reference in Rosedale Park, we bought it in 2012, or maybe it was 2013 at the tax sale. We paid $18,000 for it. We did a $15,000 rehab. We rented it for $1,000 a month. Tenant was in the home for 3 years. They actually recently moved out. We just had the home appraised for $90,000. So that is the growth of that part of the city. I mean, that's West Side. That's we call Rosedale prestigious. That's one of the nicer areas of the city.
Right.
And that's the kind of growth we've been seeing. I mean, it's not uncommon in Detroit. So,
well, that's awesome. And if I ever find myself in that way, I would definitely want to look you up to at least have a cup of coffee and chat about different areas. But until that does happen, how can folks who are part of the audience reach out to you if they're interested in finding out more about investing in Detroit?
Yeah, you can check out our website, pioneerhomesus.com. They can send us an email. Probably the quickest response would be sales@pioneerhomesus.com. All of our contact info is on the website, including our phone number. So I would check out the website. And you can actually set up a free consultation to talk with one of our investment advisors to see, if this is the right market for you.
Yeah. Well, that's amazing, Al. I really appreciate you sharing all that information. I'll be honest. I came into this discussion almost kind of looking to beat you over the head with some of the negative stuff we've heard about Detroit. And before the interview, I wanted to review and gone back and forth, but it really just brings home practice what you preach, where my thing has always been get the ground truth before you make that final decision. And it's pretty clear that as long as you're doing that, even in these areas that feel more risky, there's potentially much greater reward, because that fog is going to scare off other folks, and it gives you an opportunity to get in on some good investment opportunities that other folks are going to miss.
Right. Yeah, I agree 100%. And I love going to bat with the Detroit Bashers. It's always fun, so I enjoyed it.
Well, success is the best revenge, right? For
Absolutely.
For stuff like that. And what is, just to sort of summarize, I know when we first started chatting about doing an interview, you've closed more than 1,000 deals. Is that right?
Yes. Yeah. So in my career, we've done over 1,000 transactions. Yes.
And it's to a total of over $50 million.
Correct.
Wow.
Absolutely.
Yeah. And the proof is kind of in the pudding, I guess. It's hard to argue with success. You have been very generous with your time, Al. I truly appreciate it. I look forward at some point to maybe talking to you in the future when I'm out there looking to find a new investment opportunity. And I hope that the folks in the audience are able to take advantage of you if Detroit sounds interesting to them.
Yes, absolutely. I'd love to have you out at the office and get to know you a little bit better. But yeah, that'd be great.
Great. Thanks for sharing your time with us, Al.
All right. Thank you, Robert. Enjoy the day.
You bet. You too.